My name is Darren Joseph from HTJ.tax, and we're the team that seeks to demystify the sometimes confusing world of international tax. And today we have the honor and privilege of having another conversation with Mark. Mark, could you introduce yourself?
I'm an advisor to the entire financial industry on CRS, FATCA, and CARF, and I've advised the OECD and the EU Parliament and the EU Commission and the German government, etc. All this is on my website for anybody to look at.
Fantastic. So today we want to focus on UK trusts and UK underlying companies when it comes to wealth management, and especially now when we're spoiled for choice. There's so many jurisdictions all over the world. How can UK trusts be used to plan for the CRS, or Common Reporting Standard? Mark?
Yeah, so even if you use artificial intelligence, DeepSeek or Grok or any of those, then it misses this. It says if you're a UK trust and you're non-participating, there's look-through, and they seem to think that they treat the trust as a investment entity, and an investment entity that's in a non-participating jurisdiction in CRS and is deemed or treated or regarded as a passive NFE and therefore look-through. But there's no look-through of a trust that's a custodial institution. And the difference between an investment entity and a custodial institution is the fees that are earned, because both of those trusts as passive NFEs or investment entities and custodial institution hold assets for somebody else. So a custodial institution is an entity and a trust is an entity for CRS. People get confused. They think it's not an entity, but it is, which holds assets for something else, which a trust does, but earns at least 20% of its fees from custody fees. Now, there are 6 types of custody fees, including giving financial advice, strangely enough. So it's simple to restructure your trust, depending on the fees that are charged, to be a custodial institution. And you avoid the professionally managed investment entity simple by not having some professional FI manage your assets or being the trustee. That's why I don't use corporate trustees. And then in this case, you wouldn't use a bank to manage your assets. So it's very easy for a trust to be a custodial institution, but the trick is this UK non-resident trust must be located in a jurisdiction that's not part of CRS, and those countries I discuss. There's like 50 countries that are not part of CRS, but I again stick to only European territories, as we discussed in the previous set of interviews. Okay, so a trust is treated as entities by all agreements. So even if you go to HMRC, just Google, don't even use AI, just Google HMRC trusts as custodial institutions, and some very nice pages pop up immediately saying that a trust can either be a investment entity, and if not, it'll likely be a custodial institution. And I've yet to meet anybody anyway using trusts as custodial institutions. Why do I use trusts as custodial institutions? Because if they are located, or the trustees are located, in a jurisdiction that is non-participating, then it's a custodial institution in a non-participating jurisdiction, and there's no look-through of a custodial institution in a non-participating jurisdiction. And so why is that the case? It's because if the OECD says we're going to start looking through custodial institutions, well, 99.9% of all custodial institutions in the world are the Mellon banks, the JP Morgans, and who's the controlling persons of that? Nobody. And if you can't find, nobody owns more than 25% or 10%, then they say if you can't identify by ownership, then it's the senior management that is the deemed beneficial owner, and that would be Jamie Dimon or so they can't look through that and they can't change that. Okay, so if the underlying company that we are talking about, a UK company, or just ensure that's a professionally managed investment entity. And most are for wealth management. They earn financial assets, they earn financial income, and some of the assets, there's no de minimis minimum, can be $1, £1. That's managed by another FI, which could be another investment entity, a managing type. So that's an FI, and a bank underneath doesn't report on that FI. And the UK PMIE, it's got reporting obligations, but it doesn't because the equity interest is this custodial institution, which is an FI, albeit in a non-reporting jurisdiction, and then there's no look-through. Okay, so you know the famous William Brockman case, the Shell Bank loophole identified by the U.S. Senate Committee. Brockman was hiding billions and billions. I mean, the income alone the tax on the income was 2.7 billion, largest case of tax evasion. But he was outright lying. He had private investment entities, not in the UK. Okay, he had them in Nevis, in Cayman, and BVI, but mostly Nevis, 80% in Nevis. But he didn't have anybody owning those companies. There was no custodians. He was the owner, and so he was supposed to report on himself, but he just lied and said there's filed a no report. Whereas if you are owned by a custodial institution, you can legally file that there's no reportable person, and the custodial institution trust, the UK trust, won't report anything because it's not part of CRS.
I see Nevis as a jurisdiction being quite popular with the whole asset protection TikTok crowd, but it's getting a lot of negative attention, and there is some discussion that whole regime may be reviewed and maybe changed, especially with the present administration.
It was easy to pick up that some lying is going on. It's simple. I don't know why the OECD hasn't done this yet. If a private PMIE, professionally managed investment entity, which is the bulk of financial institutions, if they report nil for both FATCA and CRS, then do an audit. There's something funny going on. It's not like we're reporting nil because equity interest is another financial institution. If they just say there's no reportable persons, then do the audit and you'll pick up. They're going to ask, who's the controlling persons? Me. Then why are you not reporting? It's simple to stop.
Yeah, it's actually that jurisdiction, because it's a Twin Island Republic, St. Kitts and Nevis. It's on Trump's travel ban list because I honestly believe it's because each of them is guilty of something. Well, guilty from certain eyes, right? So St. Kitts is under a lot of scrutiny for the passport sales, so citizenship by investment, and Nevis plays games with the whole asset protection space, like you mentioned.
And the EU said they were going to do similar. They said 5, but they didn't name the 5. But they already moved ahead with Vanuatu.
Vanuatu.
Not allowed to travel. And that's even the locals need a visa now.
Yeah.
So visa-free travel. That's one of the main reasons people buy this. I think using it residence by investment or citizenship to avoid CRS is the most stupid thing to do, because the banks are supposed to do enhanced due diligence if somebody says, I'm in Nevis. There's 100 questions, center of vital interest, etc.
Absolutely, you're correct. So right now, anybody popping up with reputable banks like serious banks and with one of those passports, huge red flag. Huge red flag. So you're absolutely correct. Yeah.
Thank you very much again for sharing your incredible insight. What's the best way for someone to find you or to reach out to you to get in contact?
My website, co-ownershiptrust.com, and then you'll find 850 articles.